Guys, what's going on? My name's Ryan. I trade ETFs and I like to make videos on the technical analysis that I'm seeing here in the markets. And today we're going to be looking at US oil. Here we are on the daily chart, and you can see some very interesting things going on here. Now, I think that I've identified that this is a bullish 3 drives pattern, just to start off the bat and try and do some pattern recognitions when the price moves down 3 times in a fairly parallel manner. And an example of this is basically the bullish 3 drive pattern, and then you buy with support. Is important, and support right here was at, first of all, this previous low. This is a level of support, and also this longer term channel that we've been in. So we got supported by the channel and the lower low. A couple of other interesting things going on in the chart is we have a textbook double bottom indicator pattern. It's a little bit different of a pattern if you're not used to it, because technically or typically you have a double bottom on the price. The price action makes a double bottom, but if you like going above and beyond, you can see that indicators tend to go through their own bottoming patterns as well. And I've studied those, and one of these is where it makes a lowest low and then 2 bottom lows and then moves up higher from there. And this kind of goes along with the chart on the daily, and this most certainly is a divergence, but it's actually a double bottom pattern as far as our volume indicator goes, which is the CCI. And we can see that here where we move up, double bottom right here, and we move up higher. Wall price, it's very important that wall price moves downwards consecutively. We can also kind of see a double bottom on our RSI here. It's getting a little bit oversold at these levels. And one last thing I wanted to note is that it's very good that we're getting consolidation here in oil, and we'll touch on that here in shorter time frames. So here we are on the 2-hour chart, and what I meant by it's good that we're getting consolidation is that in the past we see that we've basically gone from bottom to top, from bottom all the way to the top without much consolidation in between, hardly any consolidation in between basically. You can see this big bullish run up, big bearish run down. This is the first time that we've had a major correction halfway in between the move, and so this is either an extremely bullish sign or a very bearish sign. This might be a potential reversal point. This is something different than we've seen over the course of the last year. I just want to preface that I do have a bullish bias towards US oil. That doesn't mean that if you're a bear, you should just turn off this video. It's good to see from all different perspectives. I welcome criticism. So next thing I wanted to talk about was this time signatures right here. If you've been following my videos, you know that I'm interested in the middle of the range as well as the actual line itself. So we have a high here, we have a low here, middle of the range was the high. This is the midway point in this move downwards, and this is, I don't know what this is. This is in the middle of this range upwards, but here in between this one and this one, we're in the middle of the range right now. In the middle of the range was about the breakout point right here for what I think I'm seeing is either a gigantic flag pattern or a cup and handle pattern. We're going to get into both of those here in a second. First off, I wanted to point out that I have this green support line as we move up. This is going to be my deciding factor as to whether or not I stay bullish. This is kind of like a neckline, and if we break below it, I think that there's a lot of weakness and reason to potentially turn bearish on the trade. So looking at our indicators before we get directly into the patterns, we can see that we have a couple of hidden bullish divergences here on the chart. That's where our CCI and our stochastic, my slow stochastic is in the middle here. We have our indicator making a low right here and then a lower low, while price makes a low and then a higher low. This is kind of like the indicator is reloading the gun to move up higher. And we see the same thing in our commodity channel index curve right here before we do move up higher. So if this is a flag, I've got this measured right here. I've measured it 2 different ways, and that's the vertical way, moving from our ultimate bottom to our ultimate high, and then you drag this over to the point of breakout, which would be right here. And if you want to do it the old-fashioned way, the pretty way, you draw your flag right here, and then you clone this, and you bring it to the point of breakout. And both of them conveniently line up to this top of the channel range, which would actually make a lot of sense since we have been ranging extremely well in between this parallel channel that we've been watching price move within for the last year or so. This cup and handle right here is a very good looking cup and handle, by the way. Usually you don't have this triple bottom right here and then this beautiful move on upwards. This red line here is our neckline, and once we broke out above that, you can see that we retested here, and then we're continuing to bounce off that. The measured move for the neckline of our cup and handle is from our bottom all the way up to our neckline. I drew this in blue here, cloned it, You bring it over to the breakout of the neckline, which just so happens to be this point right here. We see that price is coming right up into this range. Now, another thing I wanted to note right off the bat is that this Fibonacci has acted as very firm support for us on higher time frames. It's a good guiding factor is all I'm trying to say, and so I do not want to downplay the Fibonacci right here, which falls below all of our measured move targets. And so me as a trader, I'm trying to catch the meat of the move. I'm not trying to catch the absolute top of the move. I'm happy if I leave a couple bucks on the table if I can identify a trend, identify a pattern, and get in at a decent moment. So I have two targets right here. First target for US oil is going to be at about 48.75, it looks like. That's coming directly off the Fibonacci, and if you wanted to catch the meat of the move, if you're feeling ballsy and you want to play this all the way out, I could see this pretty easily touching the top of this parallel channel that we've been in right here at about the $50 level. All right, everybody, that's been my analysis for US oil this week. I hope you enjoyed it a lot. I've really been enjoying the feedback and support I've been getting from those people that have been subscribing me. Speaking of, if you got anything out of this video, please like and subscribe. I love seeing that. It helps me out a lot and keeps me motivated, I guess, to spend all the time making these videos, doing the technical analysis in the background, filming it, editing it, and uploading it. So I do appreciate your like and subscribe, and hopefully this gives you some sense of what's going on in US oil this week, and I wish you the best of luck in trading next week. Thank you. Bye-bye.